Hi everyone. Kpmg Sri Lanka is proud to present its annual budget forum as we have done for the past 2 decades. Unlike in the previous years where we have it as a physical event, this year we are going to have it as a virtual event on account of COVID. The budget, as you know, is a very important event for the country. It is without doubt the most significant fiscal event for any administration. And to us in Kpmg, it is also a very important event that we host for our clients. I'm sure you would have got our registration links, and I know that lots of you have registered. I'm sure you will enjoy the next couple of hours because we have an exciting keynote speaker in the Honorable Minister and an eminent panelist who will provide their expertise on the budget proposals and their implications. Talk to you soon.
Hello, a very good morning and a very warm welcome to both our long-standing viewers and clients and the wider business community. This is the Kpmg Budget Analysis 2021. Ladies and gentlemen, this year we are bringing you something of the familiar and a confluence with something brand new. So what's familiar about this event? For over 2 decades, Kpmg, as one of the most respected professional accountancy firms in the country and also of international standing, has brought you analysis that is up to date and relevant of budgets presented by successive governments. What's brand new, ladies and gentlemen? This year is the first time ever that we are live streaming on Microsoft Teams Live and also on the News First Facebook page, so do tune in. And well, this is how we are acknowledging the challenges of the COVID-19 pandemic and all the problems that we have faced over the last year. So, ladies and gentlemen, this budget, of course, is something that we all need to acknowledge as one that will possibly push Sri Lanka onto a road to resilience and recovery. That's the mindset today as we take on the analysis of the budget. Yesterday, the Honorable Prime Minister and Minister of Finance presented the fiscal policies that will possibly set Sri Lanka on this road to resilience and recovery. Today, this morning, our experts have already compiled an up-to-date analysis that will tell you how it is relevant to you, the businesses of Sri Lanka, and to the economy as a whole. We also have an eminent set of panelists drawn from their expertise in every field and gathered here today. They've already logged in and they are ready to field your questions and also add their own flavor of analysis to the budget 2021. Well, ladies and gentlemen, hot off the press, we also have the Kpmg publication, the budget book, that you will be able to download off our website. We'll give you the details as this event progresses. Just a few housekeeping instructions, ladies and gentlemen. Please ensure that your mics are on mute, and except for our panelists, please turn off your videos as well to ensure that this live streaming event is going in very well and you have no hiccups in connecting with us. Also, you can send in all your questions starting right now using the live chat box on your screen. So make sure that you do send them in. And we will be fielding them to our keynote speaker and some of our speakers. So do make sure that you send in any questions that you may have. Well, that's all from me. On that note, I'd like to now welcome Managing Partner of Kpmg Sri Lanka, also the moderator for our panel today, Mr. Reyes Mueller. Good morning, sir.
Thank you. Thank you, Nipuni. Let me formally welcome everyone to this annual signature event hosted by Kpmg Sri Lanka. where we hear relevant ministers and business leaders talking about the significant implications behind the budget. As Nipuni said, we are indeed in a new normal. We have had to move this event to a virtual this year on account of COVID. But with challenges come opportunities. Usually we would have had about 700 to 800 clients in a hotel ballroom. But today we have over 2,000 registered and more following us on our live stream this morning. So more people get an opportunity to listen to our experts. And kicking off this morning, we have our own alumnus, Honorable Ajit Nivad Cabral, Minister of Money, Capital Markets and State Enterprise Reforms, who will talk to us about the thinking behind the budget and the thrust behind each of the proposals. I think he, more than anybody else, will be able to tell us what went into bringing out the budget proposals. And of course, we will follow that with an analysis presented by Kpmg on the budget proposals and its implications. And then, of course, we will have our array of panelists who will bring to bear the particular expertise on the proposals to give you greater insights into their implications. So, ladies and gentlemen, we are in for a couple of hours of fruitful discussion on what I believe is the most significant fiscal event in the administrative calendar of any administration. So back to you, Nipuni. Thank you.
Sir. Well, ladies and gentlemen, we hope that this morning's event will set your minds and set the tone for a road to resilience and recovery. And now it's time to hear from our keynote speaker. He is eminently qualified in his subject, and under his watch, the fiscal reform and policy implemented transformed the Sri Lankan economy from a GDP of just $24 billion to $79 billion, and to being a safe, stable, and fast-growing middle-income emerging market nation. Under his guidance, Sri Lanka was able to maintain sound and stable macroeconomic fundamentals in a time of severe global uncertainties and turmoil. He was the senior advisor to the Prime Minister on economic affairs from November 2019 to August 2020. He served as the 12th governor of the Central Bank of Sri Lanka from July 2006 to January 2015. During that period, he also functioned as alternate governor of the International Monetary Fund, the chairman of the Southeast Asian Central Bank's Board of Governors, and chairman of the SAARC Central Bank Governors Forum. He is a chartered accountant by profession and also served as the president of the Institute of Chartered Accountants of Sri Lanka and the South Asian Federation of Accountants. He was an Eisenhower Fellow in the year 2000 for Multinations Program. His long list of achievements include being an author, serving as a consultant specializing in business revival and turnarounds, planning and corporate governance. He's also a voracious reader with many insights and experiences. I could not possibly list out how many of his achievements that are out there, but I would like to mention that he served previously as the Presidential Advisor on Economic Affairs and the Secretary to the Ministry of Plan, Implementation, and closely associated in the development of the policy framework and development plan of the government. As Mr. Mueller mentioned, a proud fact that we would like to state today is that he is a proud alumnus of Kpmg, Sri Lanka. Ladies and gentlemen, our keynote speaker has yet another pressing appointment, so he will not be in for long. So if you do have any questions for him, please make sure that you do send them in as soon as possible, and we will pick a few to direct to him. On that note, I now hand over for the keynote address this morning to the Honorable State Minister of Finance, Capital Markets and State Enterprise Reform, Ajit Nivad Cabral. Good morning to you, sir.
Good morning to you, Nick. Thank you very much, particularly to my friend Riaz Mueller for inviting me this morning to share a few thoughts with all of you with regard to the budget of 2021. I'm also pleased to see my State Minister colleague, Dr. Nalak Kudeva here. we sit close to each other in Parliament, and he knows sometimes the onerous duties in Parliament gets us to go and work there as well. And today I have some questions to answer, and that's why I'll need to excuse myself around 9:10, so that I won't earn the wrath of the speaker by not answering the questions that I need to answer. Be that it may, we have an exciting time ahead. We have a budget which has been already enunciated by the Minister of Finance, incidentally, who celebrates his birthday today, Mahinda Rajapaksa, who has been in the forefront of so many challenges in our country. And we are also celebrating the first year of the term of the President Gotabaya Rajapaksa. So it's a very interesting time for us. And this budget, if I may preface my remarks by saying, is the foundation on which the entire thrust of the development activities as well as stabilization, which this government has been talking about, is going to be built upon. So it's a very important part of our macroeconomic management, and that's, I think, the bedrock of the next wave of development for our country. We have also looked at it from the challenges that it has to face. We could have said this is a COVID year. We need to now get back into a shell. Let's look at austerity measures and let's not think of anything new. But no, we thought it's not the right moment to do that. We should really try our best to get out of this grip of COVID and then to move forward and achieve what was really focused upon when the President articulated his vision for prosperity for our country. So it's a challenging budget, it's a growth-oriented budget, and I would say that the entirety of the budget is based on improving our macro fundamentals and getting our growth story right, and also making sure that those aspects of the economy which needs to be stimulated are stimulated for the future. Now, we do have to acknowledge that we have had a drop in our growth in the last 5 years. That has been the story of the last 5 years. Every year, it has been a growth that has been less than the previous year. Many might give various reasons, but I think the main item that we need to understand is that unless we break ourselves from the shackle of that low growth, we will not be able to move forward. So our tax regime, our tax structure has to be oriented towards that. We got to energize our small and medium sector. We got to energize our capital markets. We got to ensure that the projects that we have undertaken are going forward. And that's the challenge that we have now taken on. So what are we going to do? I think the expert panel that is here will probably dissect the budget and then talk about the tax reforms, the tax incentives, as well as the different areas in which the budget is concentrating. But I would say that this year, to 2021 and beyond, we would focus on several key aspects. One is the need to ensure that the people of our country will have water. As you know, in the years 2006 to 2014, we concentrated on providing electricity to the people of our country. And that was an important part of the overall macro management from the point of view of the growth, because by empowering people with electricity, and that time we started off with 70% and we ended up with 99% of electricity coverage in the country, was an important part where we got all the different players in our economy to be focused in developing the country. This time round, we are concentrating on the water. Only 42% of the people in this country have water on tap. We've got to make it much higher, and we are looking at projects that will take the thrust of this development towards the 95% mark at least. So that would engage the attention of the government, and we would concentrate and give priority to those projects. The second is the road network to be improved. We have to develop about 100,000 kilometers of road, and that will also engage a lot of investment from the government, as well as a lot of effort to make sure that the entire country is connected very nicely, so that we'll have that part is also another important part, and we want to give concentration for that. The third area is the elephant-human conflict, and my wife specifically asked me to explain this because a lot of people think elephant-human conflict is not something which is needed to be addressed so much, but we have 14 districts in our country which are affected by it. And we think of elephant-human conflict as only being a conflict where a person gets killed or an elephant gets killed. No, it's a lot more deeper than that. Many people cannot send their children to school. Many people cannot engage in the economic activities, and they close down shop by 6 o'clock in the evening because they cannot do anything further. So entire economic activity of so many districts are affected so badly by this conflict, and we need to address that. So that's another priority area that the government will be engaged in. But overall, from the point of view of businesses, from the point of view of many of the clients of Kpmg, and I know many of them having been an alumnus myself, they would want to know, what do we have for the businesses to prosper? Well, we have said we want to have at least 500 companies quoted in the stock exchange. And Dr. Nalaka Godeva, who is here, was a former chairman of the Securities and Exchange Commission. He will tell you that we had an elaborate plan in the year 2012 to 2014 to take the overall market capitalization to at least 65 to 70% of the GDP of the country. All that fell apart. But today we got to resurrect that. We got to ensure that the number of companies that are being listed are much higher. Not that it will, I'm sure all of you will like that, because it will mean a lot more work to the accounting firms as well. And I wish you all success on that part. But overall, what we want to see is a thriving, robust capital market. And to do that, we have taken we have put our money where our mouth is. We have said we would provide those companies that come in and get listed a 50% reduction in the taxes, and another concessionary rate of taxes thereafter for 3 years. Now, these are not only designed to encourage those companies, but it's also designed to broad base the capital structure of our country. We need to get more and more people involved and brought into the capital structure of our country. So in so doing, we want to see at least 500 companies being listed by the end of 2025. We want to see the market capitalization being at least 75% of the GDP of the country. So these won't just happen unless there is some incentive provided as well. Take even the extraordinary item where we have said even if a person invests at least 100,000 rupees every month, or a total of 1.2 million rupees for the year, they would be provided with a qualifying payment on that. That means the government is also giving you an incentive to come in and be partners in the progressive part of the capital formation of our country. So that kind of positioning of our capital structure, of our businesses, and also we want to have more and more new businesses being formed. That's why 500,000 rupee special loans have been created, and we want to see the SME sector and the sectors of the businesses which are dealing with import substitution are also supported. We want to see some of the areas where Sri Lanka can actually have business engagements being promoted, and so that we will be able to address 2 or 3 things simultaneously. One, the growth side, where we can improve the growth. The other is support to our balance of payments, where we would have more exports and less imports, so that we'll have a better balance. We want to encourage these new areas of development and growth. For example, the ICT, the transportation, the port development, and particularly as a new area of development would be the pharmaceutical industry. All that will be given support. At the same time, we also see tremendous potential in positioning Sri Lanka as a financial hub for the future. We are very well positioned. I don't need to tell that to all of you, and all of you know that. We would be happy to see Sri Lanka being positioned as a hub, and to do that, we want to use the port city as well as a key driver in that sense as well. So if you see the growth momentum would be sustained by the private sector, where we would encourage the private sector to come in and get activated. And at the same time, we also have a large number of government projects that are presently very slowly being implemented, which are being implemented very slowly. In fact, that's one of the responsibilities that the President has cast upon my ministry, where we have to do project monitoring. And my initial assessment of those projects have shown me that there are as many as 289 projects which are presently in progress, all of which are more than ₹1 billion each. Collectively, it has a value of about ₹5 trillion, and we need to get those going. And many of those projects are stalled or going at a very light pace because of the fact that there are various constraints that have inhibited that growth structure. But we will focus on those, improve those, so that we will have a much better implementation of those projects for the future. We also know that our debt situation needs to be addressed very closely. When I did a complete analysis of our Sri Lankan debt in the last 5 years, you would be interested in knowing that our debt of about 13 trillion by the end of 2019 includes in it a rupee depreciation of about 1.8 trillion. Out of the 13 trillion, 1.8 trillion is only because of the rupee depreciation. The central bank report says that. And that's an amazing number that has been in our debt structure, the debt ballooning as a result of the rupee depreciation. That's why we have taken steps to ensure that the rupee is kept stable. We have invited investment from various sources to come into our country, which will enhance our overall situation as far as the rupee is being supported. And we would take whatever steps that are necessary to ensure that the rupee maintains its value. This last year, although we have had some tough times, we have taken the extraordinary measure of even curtailing imports, because we wanted to take the overall viewpoint that, and to endorse that viewpoint, that we would safeguard the value of the rupee, because if it were to deteriorate any further, we would have some serious consequences on our debt. So we have balanced that part. And the unnecessary, in my view, increase in the interest rates in the past 5 years also contributed as much as 1.4 trillion as an increase in our debt situation, because that part of the interest that we had to pay, in addition to the normal interest that we would have had to pay, was as a result of the high interest rates. That's why all of you would have noticed that we have made certain that the overall interest rates stay at low levels, so that it would induce businesses to function. It will also make sure that our budget deficit could be managed with only investments that have to be made and not being utilized for unnecessary expenditure, which are huge in nature as a result of the rupee being devalued or the interest rates being upped unnecessarily. So it's a question of sound macro management as well. When you were introducing me, I could see Nipuni saying that one of the areas that I had been keen to establish was the fact that our macro fundamentals are sound. So in any budget situation or any macro fundamentals in any situation of a country, the macro fundamentals need to be addressed very, very carefully. So we will address that, and the budget, although this year you would find that our overall budget deficit is high, our borrowings will be mainly from local sources and non-revenue sources, so that we would be able to manage that process also much better. Our reliance upon foreign borrowings will be much less. We had a situation in 2014 where the foreign debt to local debt was where foreign debt was 42% and the local debt was 58%. But by 2019, that had changed to around 50-50, being the composition of the debt, foreign 50 and local 50, which I think we need to now claw back once again and bring towards the 40% of foreign debt and 60% of local debt, so that we'll have a better balance in handling the debt. So debt needs to be balanced. We need to give incentives for the businesses to grow. We need to make sure that new businesses come in where we can give support to the export industries as well as some indirect export by reducing the imports. We also want to make sure that the ongoing projects are sustained at a fast pace. We also want to ensure that the FDI is invited. So we want to create pockets where FDI could come into the country, and that's why not only are we encouraging inflows into the stock exchange, we are also setting up various industrial zones as well as industrial opportunities to make sure that investment could come in from outside. So we want to see people like Riaz as well as Kpmg supporting that venture, supporting the inflow of investments into the country. I think all of you have the contacts all over the world. We would like to see you promoting those areas where Sri Lanka can gather investments, and we look forward to that happening. We also want to see the banks playing a very key role. I know the banks have been supportive of the country's investment as well as the overall trajectory of growth. But I think in the future, we would even expect more from them, because we would like to see them playing a development role as well as ensuring that the financial system stays stable. We have come back with an opportunity of consolidation. That's an important part of our overall principles and philosophy of making sure that the financial sector is strong, and that's another area that I think the businesses as well as investment advisors, banks, all can play a very, very key role, and we would like to see you doing that. So that's about an overall viewpoint which I think can be helpful for you all of you. And I look forward to fielding a few questions, and then Riaz, if you can release me, I'll be very grateful, although I would have loved to have stayed longer and listen to all the views that would be emanating in the next couple of hours.
Okay, thank you, Honourable Minister. I know that you have to go, so I'm going to ask a couple of quick questions only so that you can release you by 9:10 sharp. First thing I want to say is that talking to some of my clients, one thing, and I want to convey this to you, they all expected adjustments in tax rates, increases in taxes and other things because of COVID, and if you did that, maybe people wouldn't have complained. But they were very happy that those were not tampered with, which actually more than the rate itself, the fact that it gave a signal about stability in the policy. So I thought that was a view that I got from several clients whom I spoke to over the last evening, where they say that more than the rate adjustment, the fact that it was kept steady showed policy stability. I'd like to ask two questions that have come. The normal traditional budgets have handouts, some goodies that are normally given. But going through the budget that was presented yesterday, I see a more strategic quality to it. The benefits will be trickled down. It will not be like immediate. You're talking of incentives to industrialization, incentives here, there, creation of parks. So it will be a next level benefit. I'm sure some strategic thought has gone into it. So can I just ask you to elaborate the shift in the normal, goodies to a strategic shift?
I like your term, Riaz, goodies. That's what we've been used to. We have been used to a country and a population which has been, I would say, fooled by little goodies. We reduced the price of dal, or we reduce the price of gas, and we say, we have done this great stuff by doing that. No, that's not what really goodies are. Real goodies are long-term, sustainable initiatives which governments must undertake. I mentioned to you about the electricity that was supplied to the entire country. Now, that I would have thought should have been included in that goodies. To a person who has no electricity, to have electricity is a goodie. I mean, what better than that? I have been going around the country during the election times, and every time when I meet people in various parts of the country, what I was told is not that they want the gas price reduced by 100 rupees. But what they said was, I want a job for my son. I want a job for my daughter. Now, those were the desires of people. They came and said, I want water. I'm having my wife traveling 3 kilometers with a Kalagediya to bring some water and come. Now, those are the important parts of providing goodies to the people. Now, we have changed our overall goodie structure, and we want to ask people to understand that. When we provide a solution to the human-elephant conflict, that's a huge goodie for people in 14 districts who have to grapple with this problem every minute of their lives. When we build a new road where they can bring their produce to the market, that's another huge goodie, because we need goodies of that nature. That is what goodies are. That's what would change the lives of people. So we are explaining this to people. Don't be fooled by these goodies where just a few things are being done, but look at sustainable steps that this government is taking. And I think that message is going across. And to do that, we need investment. We need some real, clear, strong investment, but that investment is really worthwhile, Riaz. When we make that investment, you would find that the people's lives change. When we give 100,000 jobs to 100,000 poorest families in our country, it changes 100,000 lives, plus so many other 100,000 families' lives. And that's the part that we need to be focusing on. When we encourage companies to come in and list 500 of them, we would be changing the way business is done in our country. Now, that is the transformation that we are encouraging within the country. So this entire strategic thrust of this budget, entire strategic thrust of this government is long-term, is deep-rooted, is making sure that people will be able to harness their energies themselves and then contribute to economic development. And that's the main ingredient that goes right across the entire thread of this budget. So I'm particularly thankful to you for asking that question, Riaz, because I think this new philosophy needs to be embraced by people, and to think strategically, think beyond the next election, to think beyond the next glory, which is only for 15 minutes, but to look at a thrust which is long-term and which actually changes the lives of people.
Yeah, I believe you have introduced a new word into the lexicon. We should call it sustainable goodies. So mindful of the time that you have to go, I'm going to ask you one more question. One more question. You know, if you look at our budgets over the last decade, lot of our revenue is been either through taxes or fiscal measures. We don't have oil. We don't have huge mineral deposits, and which will add supplement our revenue. But we are a country with lots of natural resources, and it requires innovative thinking to how we can pad up our revenue side with inflows which not necessarily are fiscal or taxes. And I know, having worked with you before, you think outside the box. What are your thoughts about how is the government trying to leverage the resources that this country has?
I think we have some extraordinary resources, Riaz. The amount of mineral deposits that we have and the true value of those deposits is astronomical. We should really be not a country which is grappling with a $4,000 per capita income. If we think right and we get our systems right, and if we get our overall thrust right, we should be looking at very quickly GDP which is much, much greater than that. So we need to move our country towards that. We need to make sure that the resources that we have are actually properly utilized. One is the minerals, which we have plenty. I don't want to get into that subject because it's a very long subject and it's a very exciting subject. But we would give support to the mineral exploration as well as the mineral being used in a productive commercial manner, which would give a massive amount of new sources of revenue to our country. The second is the fisheries and the ocean. We actually have approximately 21 times the size of our country, as an exclusive economic zone. Now that's an enormous resource that we have, which we have not really utilized all these years. And you would also find that there are plenty of Sri Lankan areas of development which we haven't been really focusing on in the past. Recently, somebody asked me, you have a minister for Mati and you have a minister for batik, clay and batik. Why are you doing that? I told them, look, we had a minister for Mahaveli. Until then, we didn't realize the potential of Mahaveli. Until J.R. Javadana, president, came and said, we will have a minister for Mahaveli. Then people started thinking, hey, we have the Mahaveli and we need to do something about it. That's how the Mahaveli development came into being. And at that time, tourism in 1960s was only the rest houses that we had. But once tourism was brought in as a ministry subject, then we found tourism took a new flavor. The koki became the chef, the waiter became the restaurant manager, and that entire transformation took place. We need to have some change in our thinking as well. So that's why we have given support to new industries. We are nurturing those so that those will be new revenue streams. That's what all you guys in the accountancy field teach us. There are some cash cows which don't become cash cows immediately. Cash cows have to be nurtured from the point of view that they must be promoted and then only they become the stars. So in order to take you through that transformation, someone has to take the first step. That's why you would have noticed Sri Lanka has taken that very important step of earmarking certain industries, certain services, which would now be the thrust of development for the country. So local, foreign, making use of our resources would provide with all of us with new streams of development. Pharmaceutical industry is another one. With the port city also we will have another one. So there are vast number of new areas that have been identified to take Sri Lanka forward, and we want you to take steps in relation to that. We'll support you. We have given you the incentives. We have kept our tax system steady, even with a lot of people saying, look, it's a good opportunity to increase the taxes and once again come back with another tax which you are going to put in. We didn't fall for that temptation. We have resisted that. We have made sure that we give you the message that we are a consistent government, and we would like you to make use of that opportunity and then come in and start working on those lines.
Thank you very much, Honorable Minister. I promised you a hard close at 9:10. I know you have to go, but I just want to thank you. I just want to close by one thing. The success of any proposal or any plan is all on execution. And where execution is concerned, particularly led by the Honorable President, who has demonstrated great flair in executing on promises. And I know you as well, you do execute on promises. So I think we are in good hands. I believe if all what we have seen are executed, the proposals and plans, I'm sure we will come out with a very good resilient economy going forward. So let me, on behalf of KPMG, thank you, Honorable Minister. I know you well, and I won't call you by name. You are now an Honorable Minister. You are my friend, but you are still an Honorable Minister.
Still, call me by.
Thank you. Thank you very much for being with us today, despite your busy schedule, and for giving us the thinking behind the budget. Thank you. God bless.
Thank you, Riaz. Thank you, all of you.
Back to Nipuni, or over to you.
Thank you. And thank you very much, sir. And unfortunately, you do have to walk out right now, but I'm sure all our viewers will come together and thank you for that very important overview of where the budget is headed, where the strategy is headed. And obviously, we can see that I think we have picked a very good theme this year, which is that it is a road to resilience and recovery. So, ladies and gentlemen, on that note, we are about to go to perhaps the highlight of this morning's event. Every year, the KPMG experts come together and do compile not just a booklet, but this event has a focus. It is a presentation of the budget highlights for that year. So this is the part that's familiar to everybody who's tuning in. We have the budget highlights for 2021, which have been compiled. The team has been working overnight, and it's a concentrated effort on all the budget highlights that have an impact on our businesses and on taxation and the economy in general. And it's been ably guided by partner of KPMG and head of tax and regulatory, Mrs. Shamila Jayasekara, who, despite the late night, is bright-eyed and ready to go, I'm sure, with the presentation on the budget highlights. So on that note, let's connect to Mrs. Jayasekara as she is ready to present today. Good morning, Shamila.
Morning, Nipuni.
I hope you can hear us and see and connect in very well.
Yeah, thank you, Nipuni.
No problem. I'm sure it's been a demanding 24 hours, so I'll let you present the highlights. And we look forward to hearing what KPMG sees as the analysis.
Thank you, Nipuni, and a good morning to every one of you. So I will take you through a short presentation, talk you through the key proposals that were announced by the Minister yesterday. In this presentation, we would focus on the areas that the government has focused on, certain exemptions that have been afforded to industries, concessions to capital markets. There are also other concessions to specific sectors, other key proposals, and of course, concluding with the administrative provisions that were announced. Now, if one looks at the focus of the budget, the Minister did mention that the thrust of the budget was on reviving the economy. And for this, the government has looked to providing incentives for export and priority sectors. Now, this is a change in tax policy because if you would remember, when the new Inland Revenue Act came, that is from effect from 2018, there was a conscious decision at that time to move away from tax holidays. Now we see a change here, and we see that for specific sectors, for export and specific sectors, incentives have been announced. There was also focus to discourage imports. There were certain measures announced through import taxes and other regulations to discourage imports and to incentivize or to encourage domestic production. There is also simplification of taxes. There was an initiative from January 2020 to simplify taxes. There was a number of taxes that were abolished in January of this year, and we see that further continuing with the consolidation of taxes. I will take you through that in the presentation. And one of the key aspects is a continuation of the tax policy that was introduced in January 20. Mr. Mueller did comment on this. He raised a question, and the Minister also confirmed that this is a conscious effort by the government. There was a lot of changes that were announced in January of this year. We saw corporate tax rates move down. We saw industries being exempted. We saw the IT industry being exempted, agriculture being exempted. For individuals, we saw the rates of tax reduced, the slabs at which people were liable to tax reduced. We saw the withdrawal of withholding tax exemptions being expanded. Now, there was uncertainty as to whether that would continue, but that has continued in the budget of this year. So looking at the exemptions that have been afforded to industries, there are exemptions that have been afforded to key industries, being export, dairy, fabric, tourism, manufacture of agricultural products, and information technology. So if investment into these sectors exceed US dollars 10 million, and the investment is of significance, then one would be entitled to tax concessions up to a maximum of 10 years under the Strategic Development Projects Act. Now, the Strategic Development Projects Act covers not only income tax, it extends to VAT, to PAL, to customs duty, etc. So, if you do qualify or investment is made into these sectors and within the qualifying amounts, then one is looking at an incentive covering a number of taxes. Then there was also mentioned that for logistic services, that is to grow the Colombo and Hambantota ports, that there would be an exemption again given from all taxes to the operation of bonded warehouses and warehouses related to offshore business. Now, currently under the hub service regulations, these incentives are available for operations within designated areas, and presently the designated areas are the Colombo port and the Hambantota port. But what this proposal has done is that they have taken it beyond these areas, and if one engages in bonded warehousing and offshore business, then you are entitled to the exemption. So this, as the minister said, is looking at making Sri Lanka a hub, an international hub. Then on infrastructure, investment into towers for telecommunications is to be entitled to a 5-year tax holiday commencing from the 1st of January 2021. Again, areas are to be designated for the operations of the manufacture of pharmaceutical products, and if one operates within these areas, then you would be entitled to concessions under the SDP Act. So it's not mentioned as to the tax holiday period, but it is very likely that the tax concession would depend on the quantum of investment and probably the area you invest into. So here again, concessions are to be afforded under the SDP Act. Then on dairy, investments over $25 million and which entail import substitution is to be exempt under the SDP Act for a period of 5 years. Now here there is a little bit of contradiction between this proposal and the very first proposal, which says that in the sector of dairy you would be entitled to concessions up to 10 years if your investment is exceeding 10 million rupees. So that we will have to look at further and see whether there is any change to this proposal. Then renewable energy, investment or profits that one derives from renewable energy is to be exempt for a period of 7 years. Currently, certain renewable energy projects are liable to tax at the concessionary rate of 14%, and this rate is to end in March 21. So this proposal seeks to incentivize environmentally friendly generation of energy, and all projects, it doesn't say that it is confined to new projects, all projects engaged in renewable energy would now move to an exemption. Then for shipping, for the construction of local boats and shipbuilding, there is a 7-year tax exemption that has been announced. Then for the construction industry, recycling of construction material as the designated sites, the profits from these ventures are to be exempt for a period of 10 years. Then the Minister of Finance did mention that the government is focused on upgrading education and improving the education structure in Sri Lanka, and one such initiative is to upgrade technical and technology centers into degree awarding campuses. And this proposal is to incentivize that, where institutes make that transition, where they move from technical colleges to degree awarding universities, and they double the intake, and that intake is at least 50,000 students, then such institutions would be entitled to a tax holiday of 5 years. And connected to that, any person who is awarded a certification on completion of such vocational training, and that person starts up his own business with an investment of about 500,000 rupees, a minimum investment of 500,000 rupees, that startup is exempt from tax for a period of 5 years. So these are the industries that have been provided tax exemptions. They're very specific, and they are the priority sectors that the government had identified in its budget announced yesterday. There were also concessions afforded to other sectors, the first being concessions that were afforded to REITs. Now, REITs were introduced in Sri Lanka middle of this year with the regulation issued, but there were certain impediments for it to move forward, and one was certain tax inefficiencies. So, by this proposal, some of them have been removed, and in terms of the proposals, any return that one gets via REITs, whether it be the renting profits or the disposal profit that one derives on the disposal of REITs, is to be exempt. Then for the REIT, if the REIT does acquire property, then the stamp duty on that property, which is generally 4%, would be reduced to 0.5%. So this is an incentive that has been provided to the capital market, and especially to REITs, to make it more attractive. Then there is also incentive given for companies that list. The minister did mention in his message that the government is focused on growing the capital markets, and this is in line with that there is a tax concession given for companies that list newly on the Colombo Stock Exchange before the 31st of December 21. Such companies would pay in the year 21-22 tax at a rate with a 50% discount, so with a discounted rate of 50%, and would be liable to tax at 14% for the next 3 years. So the standard rate of tax is 24%, so 3 years tax would be at 14%, and in the very first year one would be entitled to a 50% discount. So these are the two incentives for capital markets. There are also sector specific proposals. For financial services, there was mention to say that anticipated loss provision that the government would request the Department of Inland Revenue to relook at and make more transparent the provisioning criteria. Now, the tax law does not identify anticipated loss, but there is mention of expected loss. So, I am presuming that this refers to expected loss. So, when one, especially the banks, when you do determine your profits, the deduction that you can claim for provisioning is under the new act, the provision that is permitted under the central bank guidelines, which is the provisioning on default. Now, this year there may be an issue, this and probably the next there can be an issue, because with the moratorium there may be no default. So, there may be a requirement to relook at the deduction criteria and extend that to anticipated losses. So, very likely this provision is to permit a deduction for anticipated loss, so expected loss, which is presently not deductible under the Act, but this would have to be clarified. Then investment expenditure of banks in finance companies is to be tax deductible. In the budget, there was a mention to say that the government would relook at financial institutes, and they would wish for institutes, financial institutions, to be of a significant composition, and as a means to that, they would request companies to look at merging and be sizable. So there is an incentive given in this area where a bank were to acquire a finance company, the cost of such acquisition is to be provided a deduction. Now, this was there a few years back as qualifying payment relief. So, we would need clarity to see whether this deduction, which was indicated in yesterday's budget, continues to be or would be qualifying payment credit or a a deduction, that is a deduction as an expense. If it's a deduction as an expense, you would get the entirety of the cost as a deduction. If it is qualifying payment relief, of course subject to the thresholds that would be specified. Then the cost of funds for a financial institution that provides loans to startups. Would the startups that were mentioned in the budget related to a person engaged in vocational activities would be provided a double deduction. So generally cost of finance on a loan is deductible. So the budget indicates that there would be a further deduction, which means very likely that it is going to be a double deduction for cost of finance. Then interest and gains on Sri Lanka international sovereign bonds is to be exempt from tax for commercial banks if the investment value exceeds $100 million. For the dairy sector, accelerated depreciation at 50% was announced on advanced technology equipment. Presently, all equipment is entitled to tax deduction at 20%, but for advanced technology equipment, there is an incentive announced at 50%. For foreign entities, there was concessions mentioned that foreign companies who do reinvest in certain areas, or multinational companies who currently import and venture into exports would be afforded concessions by way of exemption and relief on dividends. Now, it's not very clear what this proposal seeks to achieve or what it seeks to extend, because presently all dividends distributed to non-residents is exempt from tax. Under the technical notes, this incentive is to continue. So we would have to relook at what exactly is envisaged in this proposal and whether it is to give relief to the resident shareholders. On the other proposals, there is a tax amnesty that was announced subject to the payment of a 1% levy, and provided the monies that are brought in are invested in any area that has been mentioned in the budget. Now, previously under the exchange control regulations, this amnesty was available if one brought in monies through the special deposit account. You were exonerated from any offense under the exchange control law, but there were gaps, and one significant gap was that you could be exposed to taxes. So this seeks to cover that exposure, and the other condition that has been introduced is that the investment monies brought in needs to be invested in any area mentioned in the budget, but it does not specify the period of retention or whether you have to invest it into shares or into any other method or instrument, example sovereign bonds. Then on the simplification, there was a consolidation of taxes for 5 sectors. The sectors are alcohol, tobacco, betting and gaming, vehicle and telecommunication industries. Each industry has a number of taxes that they are exposed to: excise duty, special excise duty, taxes specific to betting and gaming, the TRC levy. So there was a broad policy statement saying that all these levies would be consolidated and those companies would be liable to a special goods and services tax. There was no mention of the rate of tax or the way it would be calculated, but presumably it would cover all taxes that are there, including the import taxes that some of these industries are exposed to. So this goes hand in hand with the government's broad policy on tax simplification. In January, we saw them also withdrawing a number of taxes, the key amongst them being the nation building tax and the ESC. There was a withdrawal of them, and this again reduces the number of taxes that are enforced in Sri Lanka. Again, on simplification, there was mentioned to say that customs duty would be under a 3-tier structure. There was also mentioned to say that capital gains tax would be calculated based on the sales value of a property or the assessed value. It's not very clear what assessed value is. Under the capital gains tax provisions, one is liable to tax at the transaction value, which is the minimum of market value. So it may be a provision that permits the assessment to be made by the IRD, but it is something that we would have to look at and study further. Then on the discouragement of imports for agricultural commodities, a negative list is to be introduced, and all commodities which can be grown locally are to be on that list, which prevents the import of such commodities. Cess and special commodity levy are to be imposed on all goods as a measure to protect the local industry. So they are going to relook at the articles on which these two taxes are to be imposed, and as a measure to incentivize local production and discourage imports, we would probably see new cess and commodity levies being imposed. And there was, on a broad sense, also mentioned to say that incentives would be afforded to the port city that the government is presently developing in Colombo. On a broad sense, they had said that the laws and tax incentives that would apply would provide significant incentives. Finally, on the administrative provisions, there was mention to say that the government would look to strengthen the administration of taxes, and one of the key changes is from the year 2021, all companies would be required to file in an e-return of taxes. Presently, a taxpayer, being even a company, has the option of either filing a manual return or making a e-filing. So from 2021, all companies would be mandated to make e-filing. A special court for tax appeals, to hear tax appeals, is to be set up. There is a delay in the hearing of tax appeals, and as a measure to kind of clear off all the pending cases that are there, a special court is to be set up for the hearing of these appeals. Again, to smoothen out the administration of the tax department, there is to be a time frame for the issuance of rulings and settlements of appeals. Now, settlements of appeals under the old law, all appeals had to be settled within a period of 2 years, but this provision is not there under the new Indian Revenue Act that was introduced. So here again, there would be a time frame that is to be introduced, and for the issuance of rulings. So this had been a weakness within the tax office, that one could make a ruling, but there was no time within which the determination was made or clarity was given. So this again is to be cleared out. Then there was also mentioned to say that penal provisions would be imposed on professionals who prepare or certify certain fraudulent documents. So here again, it is to strengthen the administration of taxes. So they are looking at not only strengthening the working environment within the tax office, but also to ensure that all involved in administration are held accountable. And finally, a concessionary payment plan for the settlement of outstanding NBT and ESC. So NBT and ESC were abolished from December of last year, December 19. So there was an announcement that there would be concessionary payment plans to settle all issues. So here again, what I believe the department is trying to do is that with the abolition of these taxes, there is no longer requirement to continue having units. So they would try to close the files and clear off all the work that is in these 2 units. So this basically sums up the key tax proposals that were announced yesterday. So Nipuni, over to you.
Thank you very much, Shamila. Ladies and gentlemen, I'm sure you found that to be a very, very informative analysis of the budget highlights. So this is what KPMG does, ladies and gentlemen, takes on these broad policy statements and proposals by governments and legislators and sort of condenses it for our clients and the wider business community to understand, comprehend and apply. So I'm sure you have quite a number of questions that came up from those detailed analysis. So make sure that you use the chat box on your screens and send us in your questions, because now we go on to the panel discussion. I'd also like to remind you that our book on the budget proposals is now available on our website, which is www.kpmg.com/L so /LK. You can download the booklet from there. You can take a look at our analysis, and please do let us know what you think and any questions. Right, on that note, ladies and gentlemen, we are now going on to our panel discussion. Our eminent panelists have actually been logged on from 8:30 a.m. Thank you very much to all of you, though you'll be seeing them in a moment. And I have the great pleasure of introducing all of them today. We start off with Honorable Dr. Nalaka Godaheva, the State Minister of Urban Development, Coast Conservation, Waste Disposal and Community Cleanliness. Dr. Godaheva counts among his professional achievements prior to his current governmental role top positions at top corporates, including the head of sales of Unilever, Director Customer Services of Suntel, Managing Director of Sri Lanka Insurance, and the Chairman of the Sri Lanka Tourism, as well as the Chairman of the Securities and Exchange Commission of Sri Lanka. He is academically qualified in 5 different disciplines, and he also counts a PhD in economics from the University of South Australia and a fellow member of the Chartered Institute of Marketing and Chartered Management Accountants, UK. We also have Dr. Kapila Senanayaka, Director General, Department of Fiscal Policy of the General Treasury. Dr. Senanayaka joined the Treasury in 2002 and worked in the Department of National Planning before joining the Department of Fiscal Policy in 2008. Now, Dr. Senanayaka has 12 years of experience in fiscal policy area and also represented the Treasury on the boards of several key state-owned enterprises and statutory boards. Among his many qualifications, he holds a PhD in economics from the University of New South Wales, Australia, and Master of Public Policy from the Hitotsubashi University, Japan. We have Mr. Vish Govindasamy, Vice Chairman of the Ceylon Chamber of Commerce. He wears many hats, not least as the Group Managing Director of Sunshine Holdings PLC, which is a diversified conglomerate. He has a proven track record as a CEO. His success story is at Watawala Plantations, and he has brought that company and many others to fruition and to achievements in Sri Lanka, including setting up the HealthGuard chain of pharmacies in Colombo and suburbs. The LMD magazine named him as one of the top 10 CEOs of Sri Lanka. He holds an MBA and a Bachelor of Science degree in Electrical Engineering from the University of Hartford, USA. We also have Mr. Jonathan Ullis, Managing Director of CEO of Hatton National Bank PLC. He counts over 34 years of banking experience, having served international banks, including HSBC Dubai and Saudi British Bank in Riyadh. He is the Chairman of Equity Partners and HNB Finance Limited. He also serves as a Director of the Lanka Financial Services Bureau, as well as many other directorships. He holds an MBA in Finance from the University of Stirling, UK, and is an associate member of the Institute of Bankers of Sri Lanka. Mr. Prabhash Subhasinghe, Chairman of the Export Development Board. He is an astute entrepreneur with a proven track record of capability. He leads a group of companies with global presence, including Global Rubber Industries, Global Seafoods Private Limited, and also Iyenka Holdings, a diversified investment company. He has experience leading many of the associations. He is also the principal shareholder of Selinco Insurance PLC. His acumen is ably supported by a degree in applied economics and business from the Ivy League Cornell University and higher studies at the Harvard Business School. We have Dr. Dushni Veerakon, Executive Director of the Institute of Policy Studies of Sri Lanka. Dr. Veerakone is the head of macroeconomic policy research at the same institute as well. And her current role as Executive Director and research covers areas such as macroeconomic policy, regional trade integration, and international economics. She has extensive experience working in policy development committees for the government of Sri Lanka and as a consultant to international development organizations. She holds a BSc in economics with first-class honours from the Queen's University of Belfast, UK, and an MA and PhD in economics from the University of Manchester, UK. Those are our panelists, ladies and gentlemen, and they are joined by KPMG's very own tax experts who count years of experience dealing with practical tax and regulatory questions from a diverse array of clients, from SMEs to listed conglomerates. They are who you heard from, Mrs. Shamla Jayasekara, the partner, head of tax and regulatory of KPMG Sri Lanka, and Mr. Suresh Pereira, principal tax and regulatory of KPMG Sri Lanka. Ladies and gentlemen of the panel, I am sure that you've had a chance to take a look at the budget proposals for 2021, and I'm sure you have formulated a bunch of questions and insights for viewers. And I'm sure that it wasn't as in a relaxed manner as you would have liked to, but we do expect that all of you will contribute positively to this panel discussion. I would like to now hand over to our very able moderator, Mr. Riaz Meullah, Managing Partner. Over to you, sir, and thank you to the panelists once again.
Thank you, Nipuni. Welcome to the panelists. I am aware, mindful that Dr. Dushni Veerakone has to attend Parliament today for the Public Finance Committee. The meeting is at 10. She's got 15 minutes grace. So I'm going to start off with a question to her so that she can then answer that and move on to fulfill other commitments. Dushni, the first question, therefore, I'm going to pose to you. And it goes like this. It says, it appears that the expense proposals will have to be funded from borrowings. How does the government propose to meet this expenditure while keeping the budget deficit to an acceptable level? I know it's a loaded question, but I thought you are the best person to start it off.
Thank you, Riaz, and very pleased to join this panel. I would have really looked forward to staying through. I mean, first point I think is that, as the Honourable Minister mentioned, Sri Lanka is preparing and presenting a budget under very, very difficult economic conditions. The preconditions as COVID hit, I think the numbers are well known. We were loaded with a very high and rising public debt. Fiscal deficit was also rather high. And in those conditions, to try and provide spending, additional spending to mitigate the economic fallout, stimulate a recovery, and ensure that that recovery is sustained into the medium term is not easy. And I would not envy anybody that is sitting in the fiscal policy department and the budget departments trying to put all of those things together. So just taking a quick look at the numbers, I think the what was mentioned that the budget is trying to provide incentives for businesses to take a more longer-term view. I think that's to be welcomed. But from an overall macro point of view, the answer to your question, where do we find the money for this? As was mentioned, we are not trying to increase foreign borrowing, but rather to go into the domestic market. So when you look at 2021 estimates, domestic financing of the deficit is quite high. And that sort of, it could raise concerns about what does that mean for the policy intention of maintaining a low interest rate. Can we do that with domestic financing at about over 8% of GDP? If interest rate pressures were to be there, would that then have an impact on the growth outlook, which is put at about 5.5% of GDP? So a whole host of, I think, multiple challenges that the policymakers will be dealing with. But I also think looking at the overall numbers, there is a certain degree of flexibility that has been retained. Public investment for 2021 is at a high 6% of GDP, and perhaps that's to ensure that overall GDP growth remains robust at 5%. So in the event that the more recent outbreak worsens and spending pressures on the government becomes more severe, I think there is some degree of flexibility to try and bring that public investment forecast down a little bit and still ensure that the overall financing requirements for the next year remains within manageable levels. At the end of the day, I think we need to be aware also that debt sustainability is built in to how we manage the overall deficits. So not easy, but hopefully we will try and get there somehow and through this crisis.
Dushni, I know I have to let you go because you have to go to the Parliament, and thank you very much for joining in. As you said, we would have loved to have you and get your input for the entire session, but commitments called. So thank you very much for joining us. Thanks a lot.
Thank you, Riaz.
All right. I will now take on, because I know the Honourable Minister also has lots of commitments today. He has to go to Parliament. So there is a couple of questions which I am going to pose, which has been put to me by the audience as well. Dr. Godeheva, or the Honourable Minister, I happen to know him personally as well. So, but he is now at the Honourable Minister. The question that is asked is, what is the government's plan with respect to the failed finance companies and the finance companies that are struggling? Because there is a lot at stake there, and there is coupled with that is a question which I will ask next. So I'll let you go with the first question.
Clearly mentioned in the budget that we have to combine these companies and strengthen them. We started this project when I was the chairman, SEC, and Honorable Nivad Kapral was the governor, the consolidation of financial companies. And that was the original intention, consolidate and strengthen these financial institutes. And unfortunately, that effort did not continue beyond that. That is why we found some companies failing in the recent past, and some companies are on the verge of failing, and eventually poor people who investors are suffering. So the solution, only solution that we see is to merge them, and that is what has been proposed in the budgets.
Okay, thank you. Another question, and I'm going to ask a couple of questions to you because I know you have to leave. So I
also need to leave.
I know you need to attend Parliament. So I'm going to ask.
I can excuse myself for 10 minutes.
Yeah, right. So I'm going to ask you another couple of questions and then release you. The question, this is a clarification. They're asking, when you talk about 50% concession for the first year for companies that are listing before 31st December 2021, they want to know 50% of which rate, 14% or 24% is the question that has come.
I assume that I think you should have asked that question from Nivad, who was more involved in that technical details. I assume it is from the current rate.
Current rate. Okay, I'm going to ask you the one final question before I release you. I know parliamentary duties take preference. There is a shift in the budget to encouraging local industry, and I think that's a good thing because, we have lots of talent, we have a lot of opportunities to drive growth in that sector, and the government is looking at special levies and then negative listing, etc., to protect local industry. The question that people are asking, and some of them have come through the chat box, is how does the government plan to ensure that we don't provide protection to inefficient industries and who will foist low quality stuff on the people like it happened in the pre-77 era. So that's a question that has been posed.
I think this, I like to take a little bit of time on this
Yes.
and move a little broader
Yeah.
answering this question.
Sure.
Then I think I may have done justice to my time.
Yes.
Since I have to leave.
Yeah.
See, in my opinion, a budget cannot be an isolated event. You can't just discuss a budget without discussing governance strategy. In my opinion, if you know the governance strategy, budget should be predictable. For example, if you have very carefully read the manifesto of the president and listened to various speeches of the president from the time he was nominated as presidential candidate, number of speeches, public speeches, I think even today, tonight, he'll be speaking, you should have been able to predict this budget because this is perfectly aligned with his vision. He is a president who has a very clear vision for the country, who has set some clear goals for the country and articulated his strategy. And if you just analyze what he has been speaking about, everything that is there in the budget, it can be understood. So what you shouldn't do is to look at just one part of the budget and worry why the other part is not there. Because there's a 5-year period. There's a 5-year tenure. There are 5 budgets to come. And in each budget, his policy will be implemented. Let's go back and just look at how he has formulated this whole strategy. First, he presented a tenfold policy framework. If you just remember, the tenfold policy framework, first he said, priority on national security, friendly non-aligned foreign policy, administration, free, clean government, a new constitution, productive citizen, people-centric economic development, technology-based society, development of physical resources, sustainable environment management, discipline, law-abiding, value-based society. This, in his speeches, he articulated under 4 goals. What are the 4 goals? He said, first one, a productive citizen. I'm saying these things because you see all these things in the budget.
Yeah.
Right? First, he said a productive citizen, a happy family, a disciplined, law-abiding, value-based society, a prosperous nation. Of course, prosperous nation is sovereign and developed nation. So then the 4 goals. Now these are very clearly articulated in the budget. Poverty alleviation, equal opportunities for everybody to progress, clean, efficient and clean government service, and strengthen local entrepreneurship. They are very clearly articulated. Strengthening the local entrepreneurship. And to achieve these things, he spoke about the strengths we have in this country: location, natural assets, physical infrastructure, and the human capital. And in that, the focus areas, now we have 4 years to go. We have to gradually build on these things. The initial focus would be, firstly, on strengthening the agriculture sector. Be self-sufficient on agriculture, develop agriculture as an export industry. Technology-driven society. Education and skills development, focus on that. Improve exports and encourage entrepreneurship. So now if you go and really look at what he has done in this budget, all these areas are covered. So that is where the investment has been made. We started with extremely difficult economic situation, as you all know. So in that economic situation, when we are hit by Corona also on top of that, a traditional wisdom would have been, now if you had asked for expert opinion, the so-called foreign opinion, they would advise that keep the budget deficits small, cut down your expenditure, the traditional advices. But that is not how the government has reacted. Government has looked at the manifesto, government has looked at the strategy, and government has identified there are certain areas you have to invest anyway. Because whether the budget deficit increases or not, unless you make these investments, you can't move forward, you can't implement your vision. So therefore, the budget has been articulated in that manner. So it's an investment, it's a development-oriented budget. Money has been spent on mainly on development work. If you look at the last 5 years under previous government, year on year, the capital expenditure component was coming down. Go back and analyze that. Started about 5.8%, came down at 4.3%. But they never saw that as necessary. The focus was on recurrent expenditure. Focus was on show, make people happy, spend. But then we saw the result. So that is not how we look at. We are working according to a plan. We are working according to a strategy in that we want to make this ground level development in the areas where we really want to focus. Then when you look at the macro picture, the numbers, they might not look very nice, but we are very confident we will bounce back with this strategy. That is how we move forward. So he has invested on education, he has invested on agriculture, he has invested on technology. You can see the benefit, the lot of concessions are given to the local entrepreneurs. Your taxes are not increased with all the difficulties. What would I expected? You would have expected corporate taxes to go up. You would have expected income taxes to go up. That has not been done. People have not been burdened. Companies have not been burdened. You have been encouraged to invest. You have been encouraged to invest in the areas that we believe in. So we seek your support. We expect you, the industry, to understand what this president is talking about and support us. There are a lot of things that you can do. So make use of the opportunity given. Encourage your entrepreneurial colleagues to go and invest in the right areas, increase efficiency, look at positive. In anything we can find negative things. So rather than being critical, let's be positive. Look at the positive side. In this crisis, we are coming out. Of course, last year we had a 1.9% contraction, but this year we are predicting growth when the entire world is not. Right? So if you all work together according to this plan, we are very confident we can do that.
Thank you very much, Honorable Minister, for that very comprehensive for that answer. I'm sure it put a lot of people's mind at rest. As I think people know, people like you and Nivad in the Parliament provides a lot of hope to the citizens and the industry, because you bring fresh thinking into the government, and we from our side, lots of strength to elbows, and you can rest assured, at least from us as a professional firm and from industry, we will support you because we need it for the sake of a country. Thank you very much for joining us, Honorable Minister. Thanks a lot. Thank you. Thank you. Most welcome. I will now go on to the next question to the chairman of EDB, again a good friend of mine, Prabhash. Prabhash, there is an interesting question that has come up. It says, with lots of investment benefits and concessions given to companies, particularly to enhance exports, etc., they want to know whether how does the EDB plan to make sure that these investments and concessions are suitably also directed to the SME sector, because they often form a fairly significant sector which can help export development growth. So that's a question, rather long question, but I thought you are the best person to answer that.
Thanks, Riaz. Good morning, everyone.
Yeah.
Pleasure to be here. I think the budget is pro-investment, pro-trade, and pro-exports. I think that's a great thing. Government has kept to its word this year. If you look at 2020, the entire export sector has proven themselves in terms of their performance, and the export sector effectively has saved Sri Lanka. Even during a 2-month lockdown, in the recent last 10 days lockdown, the export sector was considered to be an essential service. So I think it's really important to understand the investment framework and allowing businesses to continue to invest in this sector and to grow. At the end of the day, we need our Sri Lankan GDP to grow. And I think there is no question around that. We need a very strong growth momentum for our Sri Lankan GDP. GDP to exports, in terms of Sri Lankan situation, we had about 15% of GDP to exports, whereas Vietnam is almost at 100%, Malaysia at 70%. So we want to build a very strong export economy. It could be for large companies also, where we want to attract them. You can see the story about having this plug-and-play ICT parks, etc. And also for the SME industry, to talk about the agricultural focus that is there. I mean, we are playing on the themes we've built on this entire year. So I would reiterate to say that it's extremely strong on investment, export, and trade. I mean, the EDB has even been given the option through this budget to look at trade agreements along with the Ministry of Foreign Affairs. The Ministry of Trade also has been allowed to look at trade agreements and to look at bridging trade gaps between regions that we are not as strong with. Historically, trading with the US and the European Union, we need to diversify into Asia. This was mentioned yesterday with the largest trading agreement signed 2 days ago in our certain markets. And I think Sri Lanka has to look at this proactively. So it's the first time we're getting a formal policy announcement that we want to go into a balanced trade agreement which is beneficial to Sri Lanka, of course, and building local industries to the global market. I think EDB has done its fair share all these years, also this year, in terms of supporting all businesses. It doesn't matter if it's big or small. We want to support all businesses. We want small entrepreneurs to become big. We want the $1 million exporter to become a $10 million exporter. We want the $10 million exporter to become a $100 million exporter. And that's our base. We're willing to work with all these sectors. I think we are forgetting the fact that we are probably in the worst economic crisis the world has ever faced. And in a situation like that, you can have a budget which is pro-investment, pro-export, and pro-trade. I think that's an absolute plus point, which a lot of people are missing today. And maybe, I think, things that have not been said at the budget, as the Honorable Minister mentioned, we haven't had an increase in corporate taxes. We haven't had an increase in personal taxes. We've not had tax increases. The government is openly saying, we're going to give you a 5-year tax regime, sustainability. I think those are all sound things to be told for people to invest in Sri Lanka. So I would say the doors are open to Sri Lankan and domestic investors, as well as for foreign investors. So I would say certainly an exciting time ahead. Thank you, guys.
Thank you, Pravash. I know you have really energized the export sector. I know it's at the expense of your company, because I know a couple of your executives who are saying that they'd like to see more of you at the company. But I think that's, I keep telling that that's their contribution to the economy. So strength to your elbows, Pravash. You're doing a great job. Thank you.
Thank you, Raz. Appreciate that.
I'm going to go to Kapila next. Kapila, there is a question that's come from the audience which says that there is a provision which says that banks are asked to absorb the finance companies that they own. The question is asked, does it mean banks that hold maybe at a smaller percentage, not necessarily a subsidiary, may not own more than 50%, would they also be expected to absorb? Let's say if a bank owns 15% of a finance company, would they also be expected to absorb, or is it only for subsidiary finance companies?
Yeah, thank you, Riaz and for giving this opportunity. I think you can hear me, right?
Yes, sure, we can. Go ahead.
So before your question, could I explain a little bit of the budget?
Sure, please. Please go ahead.
As your screen displays, it's a road to resilience and recovery. Actually, that's also the theme of this budget 2021. So this is actually not the short-term budget. This is actually medium to long-term budget. This shows way forward. So this budget is unique in actually 3 aspects. One is it has shown clear vision, and the second is this is the first budget of this government, and also the third one is this is the first full budget announced since 2018. So that's why it's unique. And also, when you look at Sri Lankan history, so we have missed so many opportunities to grow. So this is the time to grow, and there's a clear vision, and it shows in this budget. And when you look at this macroeconomic fundamentals, I call it PEP. It's my word. PEP means it's a we have political stability, and also the economic stability to be, I think we have to have economic stability and also the policy stability. So, if you have a country goal, we have to have these 3 fundamentals. And on the other hand, when you look at the past, we have more focus on foreign direct investment on manufacturing, property development, telecommunication, or hotel and accommodation. But this time, we have focused our attention to other 3 priorities, such as I think Since morning we have discussed those areas. One is export sector, the dairy, and also IT, and also the agro industry, and also the pharma and tourism and fabric. So this budget is really actually public investment oriented budget that drives the economic growth. So we have estimated to grow about 5.5% to 6% over the medium term. So then there should be a public investment to be aligned with this growth. So that's the very comprehensive budget when you look at, if you analyze the past budget as well. So your question, if you can just give me the...
the question they ask, Kapila, is that the budget proposal says finance companies which are subsidiaries of banks should be absorbed by the bank. The question they want to know is, if the finance company is owned by the bank for a lesser percentage than a subsidiary, maybe 15% or 20%, would the bank be expected to absorb that finance company as well, or is it only for subsidiaries?
So this question actually, I think I'm not in a position to explain this thing at this moment.
Yeah, I think we'll have to wait for the detailed clarifications to come.
Yeah,
so I do.
If you will send me the detailed
sure.
thing.
We'll do that for sure. All right. Thank you very much. I'm going to move on to my next panelist, and this is in no particular order, but I would like to ask Vish, my good friend Vish, a question. I know this is close to his heart. Increase of minimum wage for plantation sector to ₹1,000 per day. Will this increase be linked to productivity, or will this have to be paid anyway? And what will this do to the RPCs? And I know you can speak briefly because you are no longer in the tea estate sector, so you feel free to tell what you have to say.
Thank you, Riaz, and good morning to all. Thanks for having me on this webinar this morning. I think this is unfortunate that it has come in the way of a budget because it takes away collective bargaining. All these years, the regional plantation companies have been able to set a wage by bargaining collectively with the unions. This has been going on for the longest time. So this is the first time you have mandated a wage at the budget. So I think it's going to open a Pandora's box because this will lead to other unions now wanting a wage being mandated by the budget. The other thing is, as you all know, when you move a wage that is currently at 750 rupees, there's output or what you call productivity. The other big we have been talking about is the issue of the gratuity. The gratuity is paid on the last wage that's drawn, and in the plantation sector, unlike the other sectors, even if you come to work for a day, it is considered that you have to then provide for that gratuity for that entire year. And the numbers are huge. When we are talking about gratuity, we are talking about 15,000 per company. This, you can see a huge hit to the P&L. This is something that we have been talking with the Labour Ministry for a long time to have the Gratuity Act, revised so that, there will be equitable play. Finally, what I want to say is, it would have been nice, along with this, if there was a minimum price that would have been given for the tea in the budget. Because tea, after all, is a commodity that's sold in an auction, and nobody can judge that price, whereas you can, on a budget, give a wage. So if they're pricing that, from January 1st, the minimum price of a kilo of tea will be 700 or 800 rupees or something like that. I know it can't be done because it's a free market. You can't decide a price of a commodity. Similarly, I don't think it's the right thing to do is to decide a wage in a budget, especially when the leader of the union is sitting in the cabinet as a state minister. It just takes away the entire collective bargaining. I'm sorry I have to say this, but that's the reality. I hope I answered your question, Riyaz.
Yes.
Probably more than what you wanted.
Yeah, frank as usual, Bish, frank as usual. All right, I'm going to go to Jonathan. Jonathan, I'm going to come, having kept you waiting, I'm going to give you a double barrel question. The budget talks about lots of incentives to startups, like, you know, double deductions, deduction of cost of funds, etc., you know, for banking sector who provide support. But one of the questions that come up, people are saying is that, okay, while deductions and interest rates are all fine, but banks need to create an enabling environment for startups. And one of the biggest problems startups have is that they don't have security, they don't have, you know, the PGs are not worth very much because they're young guys, but banks insist on that. So do you believe, as a banker, as a seasoned banker who's worked overseas as well, what can the bankers do to ensure that, you know, these benefits that the government is trying to foist on the startups will ultimately serve the purpose? And the second double barrel gun, which I will question, and I'll give you both, is that, you know, the government is talking about the regional banks merging with the SANASA to form a regional development banking corporation. And the question that is asked is, will this be the same as what happened to DFCC and NDB, or will this really remain a development banking corporation? Or the question is there really a market for a development bank in Sri Lanka? Okay, it's a double barrel question, long one, but I know you can answer it.
So thanks very much, Riyaz. Good morning, everybody. I hope I can be heard.
Sure, you can.
Firstly, my congratulations to the Minister and to the government on the budget. I want to thank Kpmg and Riyaz for inviting me this morning. In a lighter vein, if I take your question and basically look at the proposition, a young entrepreneur with no collateral, no personal guarantee of value, cash flow is going to take 3 to 5 years to come. Something tells me my auditor will tell me that expected loss is 100% and will claim IFRS and want 100% impairment before I even get started.
But the expected loss is now deductible, huh? Under the budget.
So instead of a startup loan debit and a customer credit, you might as well actually do a P&L debit and a customer credit, or a CSR debit and a customer credit. But getting very serious, I think this is a great initiative. It's a must as part of this pro-development budget. I must say the business that we already do entails a fair portfolio of unsecured lending, be it in corporate banking, be it in SME, but lots of it in the microfinance area, because the microfinance segment, which we have been banking for the past 3.5 decades, does not have collateral. And our ambitions and our focus is to continue to grow that portfolio. That having said, it makes a lot of sense to do this business if there is, in addition to the supporting and enabling environment that we as a private commercial bank could create for those startups, that we think of it a little more holistically as well. What could make this a holistic proposition is if we really look at a SME framework, we look at a microfinance framework for the country. In there, you've got to bring in the legal structure. You need to bring in regulatory. You need to get the accounting profession, getting them involved. I'm all for the 5-year tax-free periods to get them started, but that should not stop them from preparing accounts, etc. That should not stop them from registering somewhere so that we have a track of their development. We need to improve our legal systems. I saw a budget allocation, and I also heard Shamila talk of the to hear tax cases, but I think in general we need to expedite basically the legal system, because otherwise it becomes a safe haven for willful defaulters, and the poor guys who really are finding it difficult come to the banks and our counters to try and negotiate settlement, which we are more than comfortable doing. So my response to you, Riaz, on the first query is that banks will continue to do this, whether it's microfinance, the lower end of the SME, but that alone is inadequate. You will need to look at other structures like I truly believe the National Development Banking Corporation that is proposed as a consortium, as a merger of 2-3 divisions, will be a success if it's done properly. And if it is targeted as a development bank, purely with development objectives and KPI to drive long-term sustainable initiatives in the outskirts of Sri Lanka. It's only when they start to get, focused on the western province and see profits in Colombo and places like that, that you tend to get confused with the model and the business objectives gets compromised. You need to be really focused on what you want to do, and you really can make it a success. Answering your question further, Sri Lanka at this moment needs a development bank very badly, because we commercial banks, at the end of the day, our monies are from customer deposits. It's from investors, and we have to provide a return as well to them. We are just employees of this organization. So we take a portfolio view, and we then ascertain how much of our portfolio could we actually allocate towards ventures like this. Another positive in this budget is that you could, if you had a subsidiary which is doing investment banking, like maybe we have equity, or you intend setting up an investment bank within your unit, this will also facilitate going into private equity, venture capital, bringing in other forms of equity and long-term lending into financing these segments. After all, if you do not grow the equity in this area and just purely have them as leverage startups and continue to leverage, because after all, startups, ideally, the research and development and the investment needs to come from equity. And where you actually get into bank funding is actually the day-to-day, the working capital, and enabling the product development that has been crystallized in order to create a market and then to sell it. So if we mix up the model and then try to sort of get where equity needs to be there, we bring in debt, I think these guys will be in debt forever. So even bringing this 500,000 loan, the 4%, 1 year grace, 4 years to repay, all these are initiatives in the right direction in order to get them started, be it microfinance, be it in the priority sectors of exports, agriculture and agriculture related areas, but in particular in ICT and other areas where I see cash flow possibilities immediately, and that you don't need to wait for years for your crops to come, etc. And there's a lot of other technology that you need to bring about it to reduce the risk of actually doing it profitable, which is captured in this budget. So the second question, I think I did cover by saying, yes, I do believe in NDBFC, as well as I believe that the time is very opportune for us to have a development bank which actually has collaborative and long-term partnerships and engagement with the likes of AIIB, ADB, and the World Bank, etc., in order to look at structures whether it's quasi guarantee, whether it's let's say long-term equity, where we reduce the risk in doing this business without just limiting it to being a leveraged proposition only. But at a personal level, at HNB, we are more than happy to do what we have been doing in this segment of developing entrepreneurship and the microfinance segment and the low end of the SME. Major task for next year. Glad that the budget has given us that opportunity.
Thank you, Jonathan. I think that's a very comprehensive answer, and I believe maybe we should give this development bank that has been formed only a specialized banking license and not a commercial banking license, because when you give both, then the incentive is to go to commercial banking as well, because that has a lot of short-term profits.
Agreed.
Yeah. So I'll go on to Suresh. Suresh, you have been an advocate for REITs. I know you have canvassed and spoken at length about REITs. Can you give me your comments about the concessions that have been given on REITs in the budget, and what your thoughts are on that?
Yeah, I think actually, so when you say, actually I have mixed feelings because it's a positive thing that we witnessed here, that a concession has been given to the investor. So when the person who is making the investment, I believe the capital gain that they are trying to refer to is basically to extend the same treatment that is applicable to trading in listed shares. So the gain that the person getting, the investor is getting, is going to be tax free, and in addition to that, the dividend received on that unit, or the return received on that unit, is also going to be tax free. So that's basically the budget proposal. So from the point of view of the investor, yes, it's a very good move, because when you have the option, should I invest in listed shares or should I invest in listed REITs? So there it's very clear, because you do have dividend tax exemption or the return tax exemption, whereas it's not applicable in case of listed shares. In listed shares, the exemption is only when you sell the share on the gain or the trading profit, whatever it is, right? But at the same time, when I said mixed feelings, we have to understand, in case of a REIT structure, there are two other parties that are impacted by the tax, how do I say, the tax, as Shamila rightly pointed out, impediments or the gray area that is there. Now, for instance, if I may explain, in case of a sponsor, that is the person who is transferring the asset or leasing the asset. Now, that transaction is liable for stamp duty, that transaction is liable for capital gains tax, or depending on the nature of the asset, it could be capital gains tax, or it could be again tax on, how do I say, realization of capital asset held for business, or in addition to that, the VAT also. So this is a great barrier for, how do I say, for REITs taking off in the market. First and foremost, we need to get the sponsors going ahead so that they have no tax impediments or there should be a tax incentive, I would say. Now, okay, there is a reference to stamp duty reduction of 0.75. Now, that is also, I think, but we need to analyze that also. Now, stamp duty in Sri Lanka comes from two statutes. There are stamp duty collected by the provincial councils, and that basically the Parliament of Sri Lanka does not have the power to change. That can be done only by the relevant provincial council because of the 13th Amendment. 13th Amendment has devolved that power to provincial councils. So this is an impediment that has been there during the last so many years, and we have not been able to get any redress in relation to this stamp duty because of the structure, the Constitution of Sri Lanka. Also, the stamp duty is applicable on leases. Now, you can create a rental REIT by moving the asset by way of a lease. Need not be an absolute transfer. So there also, there is a stamp duty rate coming from the Stamp Duty Special Provisions Act that is basically within the purview of the Commissioner General and the Parliament, and that is 1% on the lease rental during the period of the lease, restricted to 20 years. So it is that could be reduced. So here the intention of the policymaker when they said 0.75% stamp duty, are they referring to that 1% being reduced to 0.75, or are they talking about the normal stamp duty that is applicable and payable to the provincial council, which is calculated at 3% on the first 100,000 and 4% on the remainder being reduced? So that second one, the 4%, that reduction is not within the purview of the parliament, not within the purview of the finance minister. That's a devolved subject to provincial councils. So that's one aspect. In addition to that, I don't want to go to elaborate. I think I'd like to see clear wording in the law in relation to REITs, that the REIT trust is either is subject to minimum tax or no tax. I won't go into explain that detail because that's going to become a very detailed answer.
Okay, thank you, Suresh. I'm going to ask one more question. I know time's catching up, but I'm going to ask a question from Vish. From his hat as Vice Chairman of the Chamber. Vish, the question has come up. Shouldn't we look at a regional trade agreement with our close neighboring countries wherein we can have better or faster traction in harnessing our opportunities? Over to you, Vish.
Thank you, Riaz, and I think it's an excellent question. But you know the past in successive government about the issues that we have had with the agreements in terms of business agreements that we have been trying to sign. So I don't know how even the SARC, even as a SARC member, we could have a SARC agreement if you look at it that way. But unfortunately, there is different ideas and different wants and needs from the different sectors. So even the Singapore Free Trade Agreement went into so much turmoil. And a lot of it had probably to do with the level of understanding on what free trades bring to Sri Lanka. I think a lot of education to the public at large of the benefits of a free trade agreement, and Sri Lanka being a small country, I think trade is the one way that can generate revenue. So even this current import ban that we are in, if it continues for a long time, Sri Lanka has always been a country that has been trading. And we have a port where we have transshipments, etc. We have value additions. So much happens on trading. So I firmly believe trade agreements are the way to go for the future. I firmly believe that we need to have a regional cooperation agreement of some sort. But then the minds have to work. People will have to believe in it. And I think a lot of education needs to be done to the different sectors, especially the SMEs who feel sometimes it is the big corporates that benefit and there is no benefit for them. So they have to be, I think the entire sector, business sector, has to be taken together in making this happen. And I'm sure the current government with the 2/3 majority and a forward-looking budget like this, for the most part, can make that happen.
Thank you, Vish. Thank you very much. I know we are coming to the close, but there is one clarification that has come up, which I will pose to Shamila. The question that has come up, Shamila, says, could you please elaborate on the 3-tier customs duty structure? I don't know whether you have enough information to provide this clarification, but Shamila, over to you. Did you get the question, Shamila?
Yes, there isn't adequate clarification in the budget statement because it's just a statement to say 3-tier structure. But I think broadly that taxes would be levied under 3 rates. Okay. So it either be at 0, 10 or 15. There is no clarification whether what items would fall, what HS codes would fall under anyone.
Okay, thank you, Shamila. It's now 10:30 and we did plan and said we will have a hard close in 2 hours. So all it remains for me is to thank the panelists who I think provided valuable insights to this discussion. and to all of you who logged in and listened to us patiently. I now hand you back to Nipuni to do the closing up.
Thank you very much. Sir, before we actually close, what do you think? What is your insight as managing partner of Kpmg? Are we on a road to resilience and recovery?
The way I see it is, I think this is a different type of budget. As the Minister said, it's a longer term, more strategic budget. And I think it is important for all of us to play a part. When the Minister said that he expects us, for example, the firms like us, to do our part, and I think we need to do that. You know, we can't fold our hands and expect the government to do everything. It's important for us to also play our part. So I think that way it is a very inclusive budget, which is more medium to long term rather than a short term. But there are some valuable inputs, and I think there has been a lot of fresh thinking gone into this. So I believe that if they execute, and execution is key, if they execute on this very assiduously, we will be on the road to resilience and recovery.
Thank you very much, ladies and gentlemen, and this is the end of our very first live streams budget analysis for 2021. I'm sure you've seen and got a flavor of how it is a road to resilience and recovery, and how Sri Lanka as a whole, no matter what strata of society, needs to bounce back from the damaging effects of budget deficits, from loans, and also the COVID-19 pandemic. We all have our own specific responsibility. I'd like to also just remind you, ladies and gentlemen, that our Kpmg's budget book is now published. It's available on our website, which is www.kpmg.com/LK, capital LK. Please do feel free to download, take a look at our initial analysis, and we'll bring you more and more information as we have more clarity. Of course, all of you saw that there was more clarity needed from the various budget proposals. So please stay assured that Kpmg Sri Lanka will bring those to you as and when they are clarified. On that note, I'd like to thank you all for joining us on Microsoft Teams Live today for this budget highlights analysis for 2021. A special word of thanks goes out to the News First Facebook page as they streamed us live, and also to Digital Contents Private Limited as they made this whole new format possible in the new normal. So thank you very much to everybody who was part of organizing this event, and thank you to you, our clients, our friends, and the wider business community. We hope you will all join us on the road to resilience and recovery. Have a wonderful day from Kpmg Sri Lanka, and stay safe.